Imagine if your best friend suddenly said they might stop lending you money. Money you've been depending on for years. That's exactly what Japan just hinted at with the United States. For decades, Japan has been one of the biggest buyers of United States government bonds, essentially helping America pay its bills. But now, Tokyo has started quietly reducing those holdings, and that move has Washington worried. Why? Because it's not just about money, it's about power, leverage, and trust between allies. This sudden shift is happening at the same time as a heated trade war over electric vehicles. The United States has slapped new tariffs on Japanese-made EVs, and Japan is clearly not happy. By trimming its United States bond investments, Tokyo is sending a message: if you shut us out of your market, we have other ways to respond. So the big question is this: is Japan bluffing? Or could this be the start of a financial showdown that threatens the dollar, global trade, and even the stability of the United States economy? For Washington, this is a no-win situation. On one hand, protecting American automakers has become a political priority. Leaders argue that tariffs are needed to shield United States companies from foreign competition, especially as the country tries to catch up in the electric vehicle race. Domestic lobbies, auto unions, steelmakers, and parts suppliers are pushing hard for these protections. But on the other hand, alienating Japan could backfire in a big way. Japan isn't just an economic partner, it's also a strategic ally in Asia, a counterbalance to China, and most importantly, one of the biggest foreign lenders keeping the United States dollar strong. When Japan reduced its bond holdings, Washington reacted immediately. The United States Treasury Secretary emphasized that trust between allies is essential, clearly signaling worry that Tokyo might escalate further. Behind closed doors, American officials know the risk. If Japan sells too many bonds, United States borrowing costs will rise. That means higher interest rates for businesses, for mortgages, and for the federal government itself. So Washington is caught between two fires. Give in to Japan, and United States automakers accuse the government of betrayal. Hold firm on tariffs, and risk pushing Japan into a financial confrontation that could shake the dollar system. This is the dilemma: protect short-term industry or protect long-term alliances. And right now, neither side looks ready to blink. What makes this showdown even more dangerous is that it's not happening in isolation. It's unfolding on top of years of financial strain between the United States and Japan. For one, the Japanese yen has been under heavy pressure. In the last 5 years, it lost about 15% of its value against the dollar. That may sound like a win for exporters, but it's been a nightmare for Japan's economy. A weaker yen makes imports, like oil, gas, and food, far more expensive, fueling inflation at home. To soften the blow, Japan's central bank has spent billions on currency interventions, trying to keep the yen from falling too far, too fast. Meanwhile, rising United States interest rates have made American bonds more expensive to hold. By late 2023, yields on 10-year Treasury bonds hit around 4.3%, forcing Tokyo to rethink how much United States debt it really wants to keep. In other words, financial pressures were already pushing Japan toward change. Tariffs just lit the fuse. And this points to a bigger trend, what some economists call currency wars. When one country raises rates or weakens its currency, others respond to protect their own economies. Japan's bond move fits into this pattern. It's not just about electric vehicles. It's part of a broader fight over who controls the flow of global money. That's why investors are asking a bigger question. Is this the start of the dollar's slow decline as the world's dominant currency? Japan isn't making this move in a vacuum. Other major players are watching very closely, because if Tokyo can use United States bonds as a bargaining chip, so can they. Take China, for example. It already holds a massive stockpile of United States debt, but has been quietly trimming its holdings over the years. Every time tensions flare with Washington, whether over technology, Taiwan, or trade, analysts wonder if Beijing will follow the same playbook as Japan. Then there's Russia, which has already moved almost entirely out of the dollar system after Western sanctions. South Korea is also in the mix. Like Japan, it's a major auto and tech exporter, and it faces similar tariff pressure from the United States. Even Europe is uneasy. European Union automakers like Volkswagen and BMW face the same electric vehicle tariffs. But unlike Japan, they don't hold enough United States debt to play the bond card. And beyond the big economies, developing nations could feel the shockwaves too. A weaker or more volatile dollar would hit currencies like the Brazilian real, the Indian rupee, and the Turkish lira, making imports more expensive and fueling inflation in countries least able to afford it. So while this started as a United States-Japan dispute, the ripple effect could spread across continents. In many ways, Japan is testing the waters for a strategy other nations might adopt in the future. At first glance, this might look like just another trade dispute over cars, but when you dig deeper, it's clear that something much bigger is at play. Japan's decision to trim its United States bond holdings isn't just about electric vehicles. It's a warning shot, reminding Washington that financial power and trade policy are deeply connected. If America blocks Japanese technology at the border, Tokyo can respond in the one place it really hurts, the dollar system. That's what makes this moment so important. For decades, the dollar has been untouchable, and United States debt has been seen as the safest asset on earth. But if one of America's closest allies is willing to use bonds as a weapon, then the question becomes unavoidable. How long can dollar dominance really last? The United States now faces a choice. It can double down on tariffs to protect its automakers, risking a financial backlash. Or it can compromise with Japan, showing flexibility to preserve alliances and maintain global stability. Neither path is easy. And whichever way Washington moves, it will shape the balance of power for years to come. So what do you think? Is Japan bluffing to gain leverage in trade talks? Or is this the beginning of a true financial showdown that could shake the global system? Let us know in the comments, and don't forget to subscribe for more deep dives into the world's biggest economic battles.